But if I have debt, now I have a metric of value being created, because if you have to pay me back something more, if there's only a limited amount at that time, that means that extra bit you either have to come out your own pocket or come out of somebody else's pocket to pay me back. So therefore, some type of exchange, some type of value has to be occurring. Yeah. So now you have a metric of value.
Let's just hop into it. Let's learn about the digital reserve. So Jomari, why don't you explain to us exactly how it works? You take us through the process of someone who will be using it, and then tell us where you are in the stage of the company right now.
Absolutely. So, hello viewers out there. I'm going to continue talking over here, but we're with you. So in regards to the digital reserve, really, like you asked earlier about why is it even called the digital reserve? We called it that because I believe that there's different economic philosophies around how you can do monetary policy. I do believe in strict monetarism. I believe in having a very clear monetary policy. Bitcoin has the scarcity perspective, like saying, hey, there's only going to be so many coins ever created in this time period. That's it. I personally, from that deflationary perspective, I don't think that's viable for productivity and for people who are inside developing regions who aren't the first movers, because it actually having that type of system doesn't incentivize someone to lend, because if I have the money, if I lend it to you, I don't have access to it. You create new value, and then that new value has to accrue to all people who still have the coin. I don't have the coin right now until you pay me back. So when you pay me back, then that new value that was created went to everybody else instead of to me. I just got the little bit. Let somebody else lend to you. I'll just hold the money. When you create value, it'll go to me. So that's the problem when you don't have an increase in your network, because if it's static, you have a static economy over time. Therefore, what we were trying to design is how do you actually create a network that is reflective of value? How do you actually create an incentive to create value? So what the Federal Reserve does is they actually lend through banks. I mean, they provide them a discount, and then that's how they increase the monetary supply. But by lending. For us, we'll say, okay, we don't want to lend to banks. We want to lend directly to people. We want to provide the people in the most disadvantaged communities to have access to funds. So how do we do that? We actually create the minting of money to be directed to those people inside those areas. So they have that access to the financial capacity. And when they actually pay back their debts, that can become a form or a metric of their productivity. So if you have a metric of productivity, you actually have a difference than Bitcoin, because now in Bitcoin, you can pass money back and forth between me and you all day. Mm-hmm. And we have no way of telling if I was creating anything, buying anything, or I'll just pass the money back to myself and look like it was passed to someone else. But if I have debt, now I have a metric of value being created, because if you have to pay me back something more, if there's only a limited amount at that time, that means that extra bit you either have to come out your own pocket or come out of somebody else's pocket to pay me back. So therefore, some type of exchange, some type of value has to be occurring. Yeah. So now you have a metric of value, and every metric of value, now you can evaluate your productivity on chain. You can evaluate your productivity on chain. You can actually keep on lending. You can increase your monetary policy to be reflective of that productivity that's happening. So that's kind of where.
Can I criticize that?
Yeah, absolutely. Please do.
Do it.
I just was holding myself. And have you ever? I think everybody here watched that Bitcoin Friends. Bitcoin Friends, hilarious cartoons.
I'm sorry, I did miss that.
Okay, that's partially explains. Yeah. That explains it. And excuse you, but the point what I'm trying to make is I just was sitting 2 minutes and listening to this MBA lecture, right? MBA, like your MBA,
right? Like Bachelor's Business. Okay, gotcha.
Masters of Business Administration lecture about these reserves, lending, using words which I'm familiar with. But if you really try to appeal to your potential users, most of them, they are not MBAs. Just people who want to get money and want to know very simple things. First, how they work, how it works.
Yeah, absolutely.
Second, how secure it is. Yeah. And the third, which is in crypto always the issue, will governments going to be on their back? So that's the question you have to address just immediately from the get-go in maybe 10 words.
Yeah,
and that
absolutely.
again, I'm just criticizing you because I want to make from you an example to our.
Oh no, absolutely. So
right.
yes, so I was introducing it more so from an industry perspective, like for a sales point perspective. Somebody using it doesn't have to know any of what I'm talking about. It's really about, hey, if you want to make money, like if you want to be a part of this lending process, if you want to like do social good while making money, like you can commit some money, you can stake some money, you can put some money in this account. It goes into a pool of money, and then people are able to, and that money is actually bid on by users. So the users then are borrowing the money for some interest rate that they bid it in their auction system. And then they do whatever if they're mowing lawns, if they're making thingamabobs, they do their work, they make the money back, and they pay back into the pool. That pool gets divided upon the people that was in there, and you get your money. That's it. That's all your experience has to be. For those who care about how this actually fundamentally works in economic systems that underlie it, that make sure that it's sustainable and viable, that's really what I speak to, because it's the state of the industry. And the industry issue I have right now is actually people are so focused on the money part that they're not thinking about the systems. And for me, what makes me excited about even this space is that people are coming together around common values, and they're creating systems that are reflective of those values. So what I'm trying to create is a system that's reflective of some values that I have. I think that that sharing and operating with everybody in the world, that those people inside developing regions, actually, they have the most capacity to produce and to make than what we have current access. But we have to have a system that can actually allow us to lend globally and internationally. Because like Kiva, because Kiva can't do that right now.
That's exactly. Even you, MBA guy, right? You're not a developer, right? And you don't want to be a developer.
I actually am a developer, but I tell people I'm a bad developer.
Yeah, you're a bad developer.
Disclaimers.
But you talk like a developer.
Yeah.
So and I'm not blaming you, because most of us, me including, we do the same. Because we're so excited about the technology that as soon as we start describing our project, we just show to everybody the inside of that project or product. No. We just so I don't know, enlightened by the idea of decentralization, of making this finance for everybody, and we don't think about the people on the other side of the screen, because they don't care.
Yeah,
absolutely not. What they care is how to get
value,
how to get finance from your product, from your pocket to their pocket. And of course, pay you back something which you ask for. But again, it's not so much a criticism of you. So it's some criticism of everybody in that space which I ever heard this presentation from. See?
No, absolutely. So I guess what I say, it's for you viewers out there, I want you to take a second, close your eyes, think about what matters to you.
That's come on.
And then as you think about that, is it just about making money, or is it about living in a better world? And can you make money and live in a better world? So, and what I'm telling people is, Bitcoin might be able to make you money, but it won't necessarily create a better world. I'm saying that.
That's deep.
I'm saying what I'm trying to build is, I believe fundamentally can make you money and create a better world. Because the people that actually need access to money aren't getting it right now. And this is a way to actually cross international borders and not worry about your geopolitical location. Not worry about where you're born, where you have dollars or you have euros or you have pesos. You can operate inside of an economic system that values their lives just as much as yours and invest in their work. I mean, that's why that's the non-technical description of what's going on.
Yeah.
But people want to do that, but they don't have a way. Kiva exists.
If I'm a user, potential user, I say I don't care. I just want to answer a simple question. If I'm an American citizen, can I use your application right now? Will it require QIC and AML? And if it will, so what's the difference between I'm using your service and anybody else's service, or the other banking services?
Yeah. Well, one of the big differences, kind of in our approach, is that we're, at least if you're a lender, I mean, the KYC part isn't necessary. The only thing you have to do is stake the money or commit the money into the network. Borrowers do have a form of reputation of getting identified, attesting, or having some attestation to their existence, because that's the only way pseudo-anonymous lending works. You have to be able to identify at some level the person. And I don't need to know who you are, but I need to be able to track your history enough to be able to sustain the network.
But you have to be a United States resident to or you can do that from China or Russia.
So that kind of leads. One of the questions I wanted to know is, so with the way the digital reserve is set up, what are the legal hurdles that you have already kind of addressed, and like what are you still going to have to address?
The main legal hurdle for us has nothing to do with the technology or the network or how it functions. It has to do with the raising of funds to execute on the project.
Okay.
Like it's the difference between those 2 points. However, at the network level, I mean, it's a decentralized network. It's supposed to operate based on the protocol, independent of us. Like that's the entire goal. Like with no like shutdown keys or anything from our side. So at network existence, anybody can participate in just like Bitcoin, just like Ethereum. It's a self-sustaining, incentivized protocol. Boom, out there. And that's really what our goal is, to have the funding and make sure we're in a place to effectively create it so that it can be out there and not be solely dependent on us. Because like with the work we want to do with making sure there's quantum resistance in it for long-term development, we actually want to use a DAG, a direct acyclic graph, because the way that the topology works, we believe is more conducive to actually the transactions, as well as using it with proof of stake because of kind of that functionality. We believe those two things work together really well. Building these things out, making sure they're done well, and they can be released in a way that is secure, and that you can have continual work on it, but make sure that it can be audited and out there in a way that we feel confident that it can continue to function independently. That's our purpose right now as it. Then from there, as a business, once the network's out, our goal is really about the onboarding of creating new applications for Kivas, lending clubs, for banks and other facilities, be able to leverage the network to provide their services.
So you want to be like an open source lending club?
No, so as a business, we want to develop the applications for that lending club can exist on the network.
Okay.
So we want to develop the software and the tools so that existing organizations can operate on the network that we built.
I see.
So you create the essentially decentralized protocol, and then you want to be that engine that is working to onboard all the existing people, and as well as get new people into the network.
Like a blockchain for lending clubs, like a network for lending clubs who can build the application on top of your network.
Right, because we want to essentially, like the base platform can do micro lending, but then we come to how like lending for mortgages, when you come to other types of debt and other functionality, we think that exists as well, but we can't build that into our base protocol in the way we want to. But you can build that on top, and you can leverage that reputation that people have built in the micro lending and whatnot to actually start building up into this larger economic system.
And what stage are you now on?
Development.
So there is not like a beta available for people to try.
We have an alpha that we can show people.
Cool.
What you got?
Yeah, I got.
Show me what you got.
I want to critique your Federal Reserve name, but it.
Well, no. So one of the things when I was like looking a little deeper into the digital reserve was, so you're saying that essentially people are like pseudonymously, you track their credit.
Yeah.
Essentially, right? So can you explain a little bit more about how that process works?
Yeah. So essentially, if you're trying to be a borrower, like there's either an attestation by current stakers who would more or less be co-signing as you existing as a person.
Yeah.
Or the actual Oracle system, which would be somebody that's not necessarily a staker but willing to put up their credit, their history to attest to you in the beginning for you to start building up your history. So therefore you're now on the network, you've been attested to for your identity by either an Oracle or someone on chain already. Then from that you're provided a small like an initial reputation score. So arbitrarily, let's say is 50 out of 1,000. So you have 50. That provides you access to maybe $50 of lending, which is in some developing regions more than enough. So
that already is like transcended boundaries.
Right, exactly. So therefore you have that access now. Now what's upon you now at this point is like when you bid on it to say what rate is reasonable to you. Now if you default on that, you can walk away. However, we also introduce you to the network, and it was more of a faucet to get you introduced to what's going on. And now you kind of have an incentive to see what's going on to actually pay it back. So you decide to pay it back. Now you have access to maybe 55, 60, depending on the different criteria of what happened. So now you're increasing your capacity to borrow, as well as being a productive participant in the network, and you're establishing your reputation. So when you're at a certain point, now you've had accrued enough reputation to actually attest to someone else.
Okay.
And however, in that attestation, we are keeping track of how much lending is going out to make sure, because there's a constant optimization balance that's occurring to make sure that lending out, it's still going to make sure that even under defaults is not greater than what has been produced in the network.
Can I ask a question?
No, you can't ask no question.
Yeah, maybe I shut it down. So I was thinking, is there some significant advantage of having this network or blockchain platform for specifically developing lending application, as opposed to having say EOS or Cardano, where you can theoretically develop the same type of application on top of their platform? You see the question? So
yeah, no, right. You actually needs a specific
what's
built out for it, because if you don't, like the reserve in this case is built so we know we're secure. There's incentive to secure the network, so that incentive is paid to people who are now when proof of stake, you're committing some funds, right? That committed funds is what is actually where we're lending from, because you actually have a time period that those funds are locked in typically.
But I can emulate that in Ethereum network in EOS as well.
Well, no, so
I can create a custody account, or I can create.
Well, so like you have to create a separate chain. You couldn't do it on like Ethereum.
No, I can do that in Ethereum with smart contract, actually. Why not?
No, but then they don't need the consensus part. Like, while they're secured, that the network's already secured. So there's no incentive. There's no reason for you to be locking funds.
So you want to stack the funds that are being used for lending with the staking of securing the network.
Exactly. Because like they're already locked, just like a bank. When you put your funds in and you know it's not going to be moved, typically, that's the basis for lending. In this case, we know that proof of stake provides a capital pool that would typically be stagnant during that time period. So therefore, we're leveraging that for lending.
I still don't understand why I cannot do the same in a smart contract environment in Ethereum. I can still have a smart contract, deposit some money there, treat it as a stake, and then use the smart contract to issue. Yes. If
you store it as a smart contract and you treat it as a stake, you could probably build out the similar functionality. But I don't think the actual staking and the lending would be they wouldn't be the part of the same pool, right? It would just be an arbitrary smart contract you've created that, like the functionality could be the same, but it's not a part of the protocol. Am I right?
Well, yeah, no, absolutely. That's why I was like, because if I didn't explain it well enough, I think he got it. Yeah, no. So it's basically it's part of the protocol. It's part of the existence of how it functions. Yeah. Because if I do it as a smart contract, then also how am I going to reference what's happening there now? Because I'm actually modifying the monetary policy to be reflective of what's actually being done on chain of that lending process. Because remember, I'm saying that lending is a metric now of productivity on chain. So therefore, if we're doing really good lending, that means that new value is being created. That means that our monetary policy should be considering that new level of productivity and increasing for that. Now, if productivity and default is high, well then the monetary policy is decreasing, and they actually start looking more like Bitcoin in that perspective, because for me, Bitcoin has a long-term stagnation thing. If defaulting is high, we have a long-term stagnating thing until you have better lending. So therefore, you actually have this potential to look like some existing things, but it's dependent upon the borrowers, the people that's actually producing on the network and the value they're creating. And that's what I think is interesting.
Well, it is, but I still not convinced.
Yeah, I'm just find it interesting that like that's a win. Yeah. So
point being that you certainly have to try that, but I think that you will have a competition. Experiment. Yes, you will have a competition from so many other platforms, because I've heard something like that tried to be realized in other platforms, including Tezos and even Tron. So I've heard about that.
Collateral free lending?
Yes.
Okay, see, the closest I know Dharma does collateral lending. Exactly. I know MakerDAO is explicitly collateral lending to yourself, like over collateralization to lend back to yourself. I know Compound does collateral-based lending. I know Celsius does collateral-based lending, but those are all requiring you to have capital. And if you already have capital, I mean, is like this is a situation where I say where's the systems that are designed for those who don't have to be able to leverage the skills and their wit and their power and their ingenuity to create value and then bring that value on chain to be part of the network.
Capturing value that is currently not able to be captured.
Right.
Yeah.
Like that's where I'm looking. I mean, and people know that's where they want to get, but having a systematic way of doing it is where I'm looking at, and doing it at a protocol
That
level.
phrase probably you have to put on top of your pitch, not at the bottom. that sounds much more convincing to me.
Yeah.
Yes, that's kind of define it. What you're trying to do.
Yeah,
kind of giving that power to people without the
You have the timestamp. Well, here, so another question that was kind of coming up was, have you done some research into where the potential bad actors could throw wrenches in the network and like how you address them?
Yeah, so I actually wrote a piece about this. It was about the case for pseudo-anonymous lending, and there was about four things that I highlighted in that piece, and I hope I can remember what they are right now. So one of them was the end game issue, where it's basically like, I'll be a good actor in the beginning, and then I become a bad actor when the pot gets large enough, and I walk away with that. Another issue was that we identified what was the issue of just the people that you attract, basically adverse selection or moral, or basically immoral selection. But basically people who are participating and were only because no one else would give them money. No one else would bet on them because they really are the worst. So that was a potential vector that consideration. Like in the same thing you have to consider for even like healthcare. Like that was the whole thing about if you're doing this kind of healthcare thing, people who select it first are people who have health issues. The people who are healthy, like typically don't want to go there. So you had those in-game issues, and then also there was two other.
I would think since you're going on a referral, if somebody refers. For like a cartel.
That's what I was thinking.
Just passing a referral off to their brother.
Referral bias.
Referral bias could probably be a vector as well.
Right. Yeah. And then that's where the staking part comes in. And one of the simple equations we actually looked at is always monitoring like the overall returns that are happening, and then also the implicit network effects of people returning, because there's a velocity of money issue as well. Mm-hmm. So if you're also considering velocity of money, so impact on your network growth, as well as the payback, making sure that's greater than what people can walk away with. Mm-hmm. Because then even if they walk away, if you take away what you've given and what they had, that might be equal. But if the network impact of them participating in the network, their economic growth is greater than that.
It's positive.
Yeah, it's positive. You can technically walk away.
Yeah.
Mm-hmm. And that's what we designed for. Like we're designing for it. Makes that. So people, if you want to walk away, all right, that's fine. But make sure you're a productive part of the network. If you're productive, we're willing to take that.
Sounds like creating your small kleptocratic world and trying to prove that it is not kleptocratic. It's okay.
Hey,
practice will tell.
I mean, right? It's a start, right?
That's a start.
Because Bitcoin as an experiment in reality has not reached a point that its design has been proven.
Yeah,
that's not until that last coin is printed.
That's an excellent point. Yeah.
This is all one grand experiment,
right, exactly.
and we're just in the middle.
Right.
So are there any other like last minute questions that we wanted to ask of Jomari? I think you've done.
I was about to ask that why you have this reserve this dirty word included in the name of your company. Because
this shirt is actually crypto at night.
I'm sorry. I didn't read it. Actually, I'm saying that.
Yeah, this is a podcast we're trying to do eventually.
Why you didn't include reserve in the name of your company?
No, so reserve because you're actually creating a reserve in the process of the network, because it's actually a cost-based proof of stake, because we're trying to parallel a little bit how proof of work. Like you're burning energy. In this case, you're burning a little bit of money, and that money actually goes into our reserve. So it's actually was backing that lending in the case of defaults. So I mean, it is literally a reserve, and it's a digital one. So we're being very straightforward in our name, and also we know that the Federal Reserve exists, and some of the economic philosophy they have, we do reflect it. I mean, I don't have an issue with the Federal Reserve, because actually the Federal Reserve isn't actually as centralized as people.
That's not the point. You don't have an issue. That's the point that most of the viewers have an issue.
No, but in reality, I'm not necessarily targeting like people who have just that strong libertarian philosophy. I'm targeting people who have a philosophy of there's more we can do, there's a greater impact we can make while still doing good. I think there's a greater market out there than how we've been. That's what I'm saying. The problem is we've been targeting this select portion of what cryptocurrencies can do around this libertarian cypherpunk philosophies. There's other economic philosophies about how the world can work that we can still use the same tools.
Oh, I see.
So I'm saying,
so a renegade here.
Yeah, right. So I'm
and more so, I think
intruder.
No, exactly. So I'm not sharing.
Get out of here.
I'm not sharing the same philosophies. I'm sharing the same tools.
Yeah, and more so, I think the term digital reserve. In 10 years' time, who knows? You could change the connotation of the word.
Oh, yeah. I like that.
That's a realistic thing, right?
So you're stealing that reserve.
Yeah.
That's good.
That's good. Let's steal it.
If you're introducing it to new markets, to people who haven't really haven't developed opinion on it, then the whole idea could shift. More people could take on that philosophy. So I mean, I kind of like it.
I've got a question. So
no.
So there's one. So I've looked at doing lending products in the past, and I've tried to set them up through various ways. And the one thing that everybody was wanting to lend in 2017. So how do you think staking will reduce the volatility overall? Because if you send out loans in 2017 to people, and then they were due, 6 months later, and you lend a bunch of money out, how are you doing your controls? And is it just on the staking, or how are you reducing the volatility of the lending points?
That's a professional question.
So reduce volatility. So for stakers, they're already committed to a lock period.
Okay.
So, and then they're actually receiving, they're stakers, so they're also receiving the interest rate from their lending, their transaction fees, as well as the minting of the new coins. So therefore, those are things. These three potential revenue streams is what's supposed to be keeping them happy. Mm-hmm. So therefore, on the lending side, the idea is even if people are defaulting, there's reserve backing it already, and they're still minting the new coins as well as getting transaction fees. So those are.
But it's a race then at that point.
No, but the reserve part is actually operating autonomously as essentially an on-chain protocol level contract. So therefore, it's not that they're controlling the interest actually from that lending is actually more of an incentive. There's a thing called, I think it's called Hume's law, and it's basically saying if people get unexpected money, that actually has a higher economic impact than the money that you expect. That interest is not promised to you. You don't even know how much it's going to be because it's actually bidded on the borrower side.
Oh, okay.
So therefore, you're not dictating those rates.
Yeah.
You're not in control of it because the protocol is just saying you have to lock money.
Yeah.
Because
so therefore, when you do get some money, you're like, oh snaps! I got extra.
let me stick around. Let's do more.
Yeah.
Because usually way
that's the economic philosophy.
Yeah, I was say usually on these systems we have a bad turn and then it's a race to the bottom.
And another way to address it is just to increase the reserve, right?
Yeah, exactly.
That's how most of the projects I've heard about, they address volatility on the market by asking users to increase their reserve if there is a high volatility in a particular type of currency.
Yeah.
So I assume you don't do in that.
No,
right?
no. Like I said, I believe in strict monetarism as well.
I see.
So that's where I am similar to, I think, a lot of the current stuff is like, I just don't believe in explicit scarcity.
So are you Keynesian? I don't even want to sit near to you.
No. I just believe that the monetary controls should be clear and transparent.
Yeah, you sound like a Keynesian. Okay. I will bear it another 5 minutes.
These be fighting words. No, I mean, economic philosophy wise, I've read a lot of them, and I kind of. I have went with that, which resonated more with me in the economic world philosophy that I would like to see, and that's kind of the competing even economics. Like, what does the world look like? What incentivizes people? Like what are they seeking for? Like, what drives them? And for me, like I said, I think there's a population that is driven by these things. Like, it's not everybody, and that's what I think is cool about this. Like I said, you can create these populations that are global. That's not necessarily anywhere specific or any person specific. It's like saying, okay, if there's a population of 2 billion people that reflect this, and the other 5 billion on this planet think otherwise, 2 billion is more than enough to sustain an economic system.
I think we got an excellent topic for the next podcast to have this discussion between Keynesians, libertarians, monetarists, and Marxists.
Marxists.
And everybody will got their own coins there because everybody going to be saying we are experimenting with it.
No, and that's why, funny enough, that's the world we live in, like where people are saying, hey, these are the things we believe. Why don't we operate according to that? We couldn't do it before in a real way.
I think it's a point. It's a good point because now we shouldn't go to the streets and protest against each other, right? Or we shouldn't throw to each other's heads like nuclear devices, small or big. Now we can just go to blockchain, realize our visions, and then see how it works.
Yeah, exactly. There you go.
It's an
Good.
I'm with you. I'm on that one.
I will not share with you one room, my friend, but I will share with you one blockchain.
It's like, no, right? It's like, get out of my house.
But I'll see you on the chain. All right. Is there anything else you'd want to tell the viewers about the Digital Reserve, like where they can find you, what's going on next?
Yeah, the Digital Reserve. We're on many of those good social media, like we're on Facebook, Medium, Twitter, Instagram. What else social media is? To Telegram.
Yep.
Like, I think we're all it's under the Digital Reserve, our Digital Reserve. If you Google us, you typically end up with us. Sometimes you end up with the Reserve, which is a stable coin, which is not us. And sometimes you end up with the Digital Reserve people who don't do anything and like they just like have the name on something. not them. Like they have a big globe and it's black and they talk about some random stuff. That's not us. Like our page is clean and nice. TheDigitalReserve.org.
Yeah. That makes it easy to find.
Feel free to reach out to me. Like, we can always chop it up. Jomari, JOMARI_P. Like, hey, I mean, my name was already gone. I had to throw that underscore in there.
What was it? The Jomari with the
Jomari_P. No. Jomari on Safari. This Ferrari.
Jomari Safari.
Jomari.
I remember now.
And sometimes, like, I eat calamari while playing my Atari. But
he can go on forever. Well, yeah, thank you so much for coming.
It was a pleasure. Thank you for having me.
This is extremely enlightening for me. Like, finance is definitely not my strong point. So I hope that the viewers learn just as much as I did, if not more.
Yes.